The most powerful unelected position in American finance just changed hands for the first time in 8 years. Jerome Powell is out and Kevin Warsh is in. Warsh is the man Trump picked to run the Federal Reserve, and depending on who you ask, he's either the sharpest inflation hawk in a generation or he's a political puppet who's about to set your savings account on fire. So, which is it? Good or bad for your money? Let's find out. Kevin Warsh isn't new to this. He sat on the Federal Reserve's Board of Governors from 2006 to 2011. During the 2008 financial crisis, he was Bernanke's personal assistant to Wall Street, the man in the room during the collapse of Lehman Brothers, Bernstein's deal, and the AIG bailout. And then he quit. He resigned in protest over the Fed's money printing program, arguing it was laying the groundwork for an inflation problem nobody was ready for. He was right. In 2022, when inflation hit 9.1%, Warsh said publicly that this was the Fed's biggest policy failure in 4 decades. Trump noticed. He nominated Warsh in January 2026 to replace Jerome Powell, whose term ends on May 15th. On April 29, the Senate Banking Committee voted 13 to 11 along strict party lines to advance his nomination. Not one Democrat voted yes. That's the first fully partisan committee vote on a Fed chair in American history. And this detail matters, and we'll come back to it. So what's the bull case? What's the optimist's view? Why Warsh could be great? The thing you have to respect about Warsh is his track record. When almost everyone at the Fed was calling inflation transitory in 2021, Warsh was on record warning it would spiral. The data proved him right. That's not luck, that's a fundamentally different way of reading economic signals. He also said something unusual at his confirmation hearing, that he wants messier meetings. He called it a good family night. Most Fed chairs avoid dissent, and Warsh is actively inviting it. And here's the thing, that might actually be healthy. At the last FOMC meeting, there were 4 dissenting votes, the most since 1992. That's not chaos, that's the institution stress testing its own assumptions. For an economy dealing with energy spikes, tariff inflation, and geopolitical war premiums, you want people in that room who are willing to argue. He also wants to change how inflation is measured, favoring a trimmed mean approach that removes statistical outliers and gives a clear read on underlying price pressure. If the current inflation looks better on that measure, it could open the doors to rate cuts that actually reflect reality and not politics. He's also pushing to shrink the Fed's $7 trillion balance sheet, a structural cleanup that monetary economists have been calling for since quantitative easing started. So the best case scenario comes down to this. Warsh is the rare Fed chair who saw the last crisis coming and is now positioned to prevent the next one. With that said, what's the bear case? What's the risk? Why Warsh could be dangerous? That partisan committee vote I mentioned? Democrats on the Senate Banking Committee called Warsh a sock puppet, someone who would cut rates on political command rather than economic data. Senator Elizabeth Warren called him a uniquely unfit candidate. She walked out of the confirmation chamber before the vote was even complete. And here's the part that should genuinely concern you. Before Warsh could even get a committee vote, the Department of Justice launched a criminal investigation into Jerome Powell over alleged cost overruns on an HQ renovation. Federal prosecutors showed up unannounced at the Fed building, and then the moment Senator Tillis said he needed the probe dropped before he would vote for Warsh, the DOJ dropped it. That's not coincidence. That is the executive branch using criminal prosecution as leverage over the central bank. That has never happened in American history. Fed independence is the bedrock of market stability. The moment investors believe the Fed chair is taking orders from the White House, you get a risk premium baked into every treasury bond, and that raises borrowing costs for everyone. Mortgages, car loans, business credit, all of it gets more expensive. And the pressure is real. Trump has said publicly that he wants interest rates at 1%. The Fed is currently sitting at around 3.6%. That is an enormous gap. If Warsh moves to close it faster than the data supports, inflation doesn't stay at 3.3, it goes back to 7 or 8. So the worst case scenario comes down to this. We have a Fed chair who's ideologically sharp but politically captured, cutting rates into a still inflationary environment because the White House wants a growth headline. So good or bad, here's my read. Kevin Warsh is the right diagnosis at the wrong political moment. His economic instincts are sharp, his inflation track record is genuinely impressive. In a vacuum, he might be one of the better Fed chairs in a generation. But we don't live in a vacuum. We live in a world where the president weaponized a criminal investigation against the sitting Fed chair to clear a path for his preferred nominee, where the DOJ warning of reopening the investigation is now hanging over the building Warsh is about to walk into, where the White House wants rates at 1%, and where this man needs 53 Senate Republicans to keep his job.